Welcome, Bobby, to Wealth Matters podcast. How are you today?
Hey, good morning, Alpesh. Really happy to be here. I know we've met a couple of times and chatted a little bit about real estate. So really thrilled to be here.
Yeah, and you and I share pretty much common journey. Of course, you are way ahead of me in that journey, but both of us started in IT or slash tech
Yes.
and moved into real estate. So, we have a lot of common things to share. So, what do you do, Bobby?
So, Alpesh, in April of 2019, I was fortunate enough to have kind of left my tech job. I was in technology pretty much all my career.
That's awesome. Drum rolls, please.
Thank you. Thank you. But yeah, no, I was able to build some passive income that, from my rentals and from my syndications and some note investing that I do. So I was able to, so what I did was I waited approximately 2.5 years to make sure that the passive income exceeded or far exceeded my W-2.
Yeah.
So I wanted to make sure that it was consistent, that it was not just a one-off kind of an event, and where in 1 year I did well, but I wanted to make sure that for about 2.5 to 3 years that it consistently exceeded my W-2.
That's an awesome tip. We haven't even started. We
Yeah.
just dropped the wisdom right there that, and I'm in that same boat. I've been wanting to wait for another year and a half or two to make sure that, I have enough passive income to sustain my lifestyle, or at least it's exceeding what I'm currently making or I have been making, right? So that's a great point because a lot of people are eager to jump in. Some people, of course, wait too late because they are always trying to figure out, oh, should I even buy this property or invest? Because this is not gonna, start removing or me from my W-2 job, or start. It won't help me, start building that passive income. But it takes a while. It's not. It's not that gambling or lottery or a stock trade thing where you could be millionaire next day, right?
Absolutely. Absolutely. And a lot of folks, especially in the Bay Area in tech, they make solid incomes,
Yep.
right? So we want to make sure that your passive income is exceeding, six figures or so annually for you to retire comfortably, for you to have that security, so that's what we want to talk about is how do you do that?
Yep. So let me ask you this. How and when did you start in real estate?
So, my Alpesh, I'll tell you, my story is kind of a little interesting, but it's not too different from what a lot of people are doing today. So I'm actually probably a lot older than, of course, than you. You're a young man. I'm 55, and I came to the United States when I was 19. I went to college,
Nice. Oh, no.
and I got a degree in computer science, and I was in a small town in southern Alabama called Mobile, Alabama.
Oh, yeah. Yeah. I invest in Birmingham and I know Huntsville and
Oh,
all. So I know Mobile. But of
yeah.
course, I haven't
So
been
Alabama
there
is
or lived there.
yeah, Alabama is quite the hot spot right now for investment.
Yes.
So
Yeah.
Huntsville, Mobile, Birmingham,
Montgomery.
Montgomery,
Yeah. Montgomery. A lot of, yep.
a lot of invest. So anyway, I was there. I graduated in 1988. So way before Y2K, way before
Yeah.
.com, way before
Long time
internet.
ago.
Yeah, so I was fortunate enough to get a job in Southern California, in a small town just outside of Orange County, and I was renting a place with a gentleman. He rented a room, and I was waiting for my green card, and I knew my to get the green card was going to be another 4 or 5 years.
Right.
I got my labor certification, and so I could work, but I couldn't really move around. I was kind of at that time, you the labor certification process was still challenging, and you were kind of tied to one company. So I was in Riverside, California, and I was renting a room. But the gentleman that I was renting the room from, it was a 3 bedroom, 2 bath, and then slowly he started to add a lot of other tenants in the same house,
Hmm.
and it got kind of complicated with sharing the kitchen and the restrooms and all that. And I was single, so one day I was driving around. I saw a for sale sign, and I walked in just curious. I was like, okay, what does it take to buy a house? And I was killing time. And long story short, the lady who was the doing the open house, I started talking to her about the mortgage and what it would take to purchase the house. And I was under the impression that I had to have a green card or be a citizen to buy a house. And she's like, no, as long as you have a W-2 and you got some kind of a down payment, we can get you into the house. So I started thinking. I said, what if I rent out 2 other rooms? It was also a 3 bedroom, 2 bath I would say in a B neighborhood, and a nice big yard. And so I ended up buying that house at the age of 24.
Nice.
And then I put an ad in the local Riverside newspaper, and sure enough, the phone rang, and within about a week, I had 2 roommates, and the rent wasn't going to quite cover the PITI, the principal, interest, taxes, and insurance,
Right.
but it was going to cover my PI. So the principal and interest were basically covered by
Yeah. So you are almost living for free, even if it's not
almost.
covering. Yeah. That's
Yeah, it was living for free and a couple of tax breaks and all. So
yeah. You can't
it
go wrong. You
was
don't even have to pay taxes after depreciation.
exactly.
So that's a great story. So you started with house hack.
Yes, I started with house hag before it was a term on in
Interesting.
exactly.
So
So
when go ahead. Sorry.
yeah, so the main thing was I was living there, and the roommates were pretty nice. The turnover was not very high. I think in the 5 years or so that I owned that house, I changed roommates maybe twice at most.
That's great.
Yeah.
So when did you decide to switch to full-time real estate then? And what was the reason you made the switch?
Yeah. So, after that, after I got my green card, I actually ended up. I always wanted to be in Silicon Valley. I had some relatives that were here in Silicon Valley, and I always used to visit. And I always kind of, dreamed about living in the Bay Area because all the tech companies were here.
Right.
And Riverside is not really known for tech,
Nope.
so
Nope. Not even now. So
not even now.
not 15, 20 years ago.
Yeah. But so I had an opportunity to work for a company and transfer to the Bay Area. So I ended up in San Bruno, and I worked for a Japanese company. And but then I realized that I didn't negotiate a very good package because Bay Area was way more expensive than
Mhm.
Riverside. So a recruiter called me, and of all companies, in 2000, yeah, in June of 2000, I ended up working for a company called WebEx. Uh,
Oh, yeah,
yeah, WebEx before they got popular. This was prior to Zoom, but
right. Yeah.
I was an early employee at WebEx, and we went public, and so on. But the main reason why I had to jump into real estate was I went through a divorce in 2003, 2004, where by the end of the divorce, I I basically lost everything that I had made from the age of 19 to 39.
Oh,
It was a major setback. There was a lot of alimony because I was making good money at WebEx, so there was some alimony issue.
right.
So basically, I had to hustle. I had to figure out what I'm going to do after the divorce was finalized, and I went from living in a 4-bedroom, 2-bath house to going back to rent a room in Milpitas.
Oh,
Yeah. I went from a
that's
Fremont.
a circle. Yeah.
It was back to that circle, and so sometimes, Alpesh, out of desperation and necessity, you do things to make ends meet.
Right.
Um, so I started buying houses in 2010. I would go to the courthouse in Oakland and San Jose. I'd squeeze out a little bit of time here and there to go to the auctions, but I'd buy them, and I had a partner, a contractor, and I would put up the capital. He would do the rehab, and then I would then split the profits with him.
That
Uh,
was a great time to start buying house.
yeah. It was a great time, and we did several fix and flips in Oakland and San Jose. But I actually did not like the rehab process, to be honest with you. To this day, I don't enjoy major rehabs. There's always, if I was a contractor, I would gladly do it. But
Yeah.
in hindsight, it was too stressful. It was distracting me from my day job. So
And
after,
I keep telling people it's an active business, right?
Mhm,
It's not
mhm.
passive. Rehab is, you need an S corporation. That's an active business. You got to stay involved.
It is an active business. You're 100% right, Alpesh. And a lot of your listeners, if there's one thing that hopefully there's more nuggets, but if they can take your advice and understand that it's an active business while you're still working in your tech job, and you think you can fix and flip, sometimes you can, uh, but it, it's it comes with a lot of stress and a lot of dependencies on contractors, especially in this market now. So I hope they do take that away as one of the advices, one of the things that you're talking about. But but yeah, so the long story short, Alpesh, I became a private money lender. I
Oh, okay.
Yeah, so I would tell my contractors, I'm like, listen, I don't want to be on title. I don't want to take, split the profits and this and that. How about you borrow money from me, pay me an interest and some points, and you go on title, you manage the project. I don't want to hear about it. I don't want to, go to the job site anymore. And they were okay with it. And so I became primarily a private money lender to rehabbers in the Bay Area.
Interesting.
Yeah,
A very nice way
yeah,
to get out of the flip, but still be involved.
exactly, exactly, exactly.
That's
So,
great.
yeah, and the other thing I did, Alpesh, and I know you're doing this as well, is to network. You're a,
Yep.
you're a great networker. You're surrounding yourself with smart people. So in 2011, I started a meetup group out in the East Bay. And the primary reason I started that is that I needed to surround myself with really
Yep.
smart people like yourself and so many others. So that's what I do. I run a meetup now. It's grown, it's got about 4,000 members.
Yeah, and thank you for that meetup. That's how I met you a couple of years ago.
Yeah,
I attended the meetup to do the exactly same thing, to
yeah,
network with like-minded people, hang out with smarter people, right?
exactly, exactly.
That was a great. So, how did you transition from tech to real estate then? What
Yeah,
was
yeah,
the
yeah.
process?
So then I built my portfolio, right? So the portfolio comprised of out-of-state rental properties, Bay Area rental properties, Fresno rental properties,
Okay.
3 syndications. So that's totally passive. Uh,
Right.
my rentals are now almost 95% passive, and then private money. So between rental properties, 3 or 4 syndications, private money lending, uh, those three aspects of real estate allowed me to, to retire from my W-2. Um, but I was fortunate that I got into my rentals, a little bit early, in 2012. I kept buying, I kept buying
Yes.
one or two properties per year, um, and the private money lending, and also I got into some of all things, mobile home parks syndication, and they've done very well. My apartment syndication has not done as well, but I still hold out some hope for that one. But real estate is not all roses and guaranteed returns. So my apartment syndication has not gone well, but the mobile home parks have done well. And Alpesh, I'll tell you a really interesting story. I met the syndicator because he presented at my event.
Nice.
Yeah, yeah, and we got to know each other, and I'm like, this sounds like a great idea to invest in mobile home parks. So that's how I invested with him.
Yeah.
And
And I keep hearing about mobile home parks. Even I have been looking into some, trying to get into the game. It's because the housing prices have gone up so much everywhere. Of course, we always look at California, but everywhere. So that affordable housing is the next big thing, right? And
absolutely,
mobile home park fits the bill.
absolutely,
But one another thing you mentioned, which I liked and which I keep telling all my listeners and my friends and everyone I meet, that diversification is the key. Same way, you go to your fund manager and they keep asking you about diversification or keep asking you to do it. Same way what you did. It's amazing that you started with rentals, right? And you mentioned Bay Area rentals, but then you also have out of state. Then you
yes,
have Fresno,
yes,
yeah, which is also not close by where you
yeah,
can manage it yourself. But then on top of that, you are still doing private money lending, and you did syndication. And this is exactly where I am going
yep,
in my journey. And I keep telling people that don't just keep buying your rentals. Also look into other ways or other avenues so that you have diversified yourself. Of course, you want to be specialist in one game, but you also want to make sure that if something happens in the market, if there is a correction, you also are diversified enough so that if one of your income stream takes a hit, the other income stream is still doing good or even does better.
absolutely, absolutely. You're 100% right, Alpesh. You need to be slightly diversified. The Bay Area is at all-time high. So if you got in a few years ago, you're doing great. But going forward, you got to be a little cautious
Yeah.
about. Um,
And on top of that, I just mentioned about stock market, and by the way, we are recording this episode on August 5th, the Monday,
yeah.
and I'm just checking the stock market, and Dow Jones is down 802 points as of now.
Oh boy. Oh boy.
So yeah, if Bay Area, everyone thinks, yeah, we can just keep buying stocks and and have a couple of houses and we would be millionaires and we don't have to do anything. But that's not what how I or Bobby or some of the big real estate people operate. They always diversify. They create enough income and cash flow.
Yep. Absolutely. You have to. So yes, one of the things, Alpesh, that I did was I did try stock options. As I was trying to discover where I could make some extra money,
Yep.
and I did stock trading. One of the things, I'd get up early, and listen to CNBC or
Yep.
Bloom. For the past, I want to say 5 years, maybe even longer, I have not turned on CNBC or Bloomberg or listened to Jim Cramer or because I'm completely out of the stock market, except
Yeah.
for my 401k with my previous company. I did have my 401k, but that was, again, a passive income. But I don't trade options. I don't trade stocks, although the stock market, I hear, has done well in the last 10 years as well.
Oh yeah.
But I don't have the ability to do my day job, uh, and watch the stock market and trade options and so on and so forth. It's another distraction that I avoided. So I focused entirely on real estate. But it's good to have a diversification if you own some high quality stocks, and there's nothing wrong with that. But yeah, you do have to monitor them a lot closer than real estate.
Yeah, and it's so I have done the same. I did options trading, futures, forex, and about 3 years ago, I decided to get out. And same thing, because I was not distracted for my day job, but I was distracted. Uh, I couldn't spend time with my family, right? Every time I wanted to get up and look at this and whole 24 hours, I was worried about, futures, forex, this, that. And it's so liquid. And because of that, it's emotional.
Exactly.
You can't sell your real estate next day if you think Zillow is showing 50 grand down, right?
Exactly.
But your stock, you're going to rush and buy or sell. So again, so I'm also pretty much out of it, other than some of my IRA, etc.
Yes.
So was it easy to move from tech to real estate, or what process did you have to go through? What did you have to do?
Sure. So the main thing, maybe it's my personality, but I take action. So I do, when I started to 5 years ago, I decided that I'm going to invest out of state. So I flew out to Kansas City and I took action. I flew out on a Friday. I took Friday off. So I think I took a red eye on Thursday night, spent Friday, Saturday, Sunday in Kansas City, flew out on Sunday night. But by the end of that trip, I had decided that I was going to buy 4 homes, and we did. I found somebody. So the main thing is to take action. You can't be on the sidelines forever, right? You gotta say, listen, whatever happens, what's the worst? You got to figure out your worst case scenario. Is Kansas City going to disappear? Is Fresno going to disappear off the face of the earth? And it's not, right? So I went, I bought, I put the money down, the down payment. It was an all cash purchase. I did the BRRRR strategy on my Kansas City properties, where I would buy them with a broker, and we would fix them up and then get a refi loan and see if we can extract some of that money out. And we did. We successfully either extracted all of the funds out or most of the funds. Some homes, it took me a little while to extract the down payment and the rehab cost, but the ROI was in the high double digit, kind of in the 20+% range, from a cash on cash perspective.
That's amazing.
Yeah.
That's amazing. Yeah.
And I still own some of those. I've had very little turnover. I do have solid property management there, but it was not easy by any means. It did take an effort. It did take putting faith in a team, that I barely knew, but I did do my homework on the team, and I didn't see any red flags. So, but in one case, I did have the wrong property manager. I had to switch that property manager out. But it's you live and learn. But the main thing I would say, Alpesh, for your listeners, is you got to take action.
Actions.
Yeah.
This is exactly another thing I keep mentioning. No tire kickers. Unless you take an action, you won't be able to do anything.
Absolutely.
That's a great point. So can you give some tips or advice to someone who wants to make a switch from high paying W-2 job to real estate?
Yeah. Number one, grab coffee with Alpesh. I would say number one advice, or both of us, but go and network at Alpesh's, listen to Alpesh and go meet with him, come to my events, come and hang out with like-minded people, take advice from people that have been through the grinder before, and So my advice is always a network, take action, uh, take calculated risk. Don't take uncalculated or too risky projects. Don't necessarily believe all the gurus that are on TV or on Facebook, or um, it what they claim can often be deceiving. I invested with a couple of those guys and have been burned. So just go and surround yourself with people like, that are down to earth. We're like Alpesh, myself. We're in it to help you, to educate you, to share. Be as transparent as possible, and and I would say that that should be your action that you should take. And then um, I would say find your comfort level as to whether you're willing to invest out of state, whether you want to invest in the Bay Area, whether you want to invest in a syndication, or you want to partner with somebody. Figure out what your risk tolerance level is and what your desired outcomes are. Uh, but real estate is a get rich slow strategy, so it takes time. So time is your friend, and time is your enemy. If you're older and you don't have a lot of money saved up, you do need to take more active action. But if you're younger, you can use time as your advantage, and get into properties, and understand that there's going to be some setbacks along the ways, but be prepared for those and know how to handle those setbacks. So, for example, in our meetups, one of the things we teach is how do you start to build a portfolio out of state without some of the headaches. So how do you do a remote rehab but not deal with some of the issues of contractors and so on and so forth. So we do have some ideas about doing remote rehabs from experiences that we have gone through, and over time built the right teams, the right boots on the ground. We have turnkey properties that are designed for Bay Area investors. So if you'd like, and Alpesh might have some recommendations as well, but if you go to betterturnkey.com, that's where we design turnkey properties that cash flow for a lot of the West Coast and the East Coast folks, that have equity built in, that have cash flow, so that you can kind of, it's like Monopoly, right? You start to build your portfolio. And I'll end with this, Alpesh. I have a friend of mine. She works for a pharmaceutical company. Makes good money. She's in her early 30s, and we started to help build her portfolio in Huntsville, Alabama, about a year ago. And so she started with her first rental. She's now on her sixth rental, and every time she saves up about 30K or so, I get an email from her, and she goes, "Hey, I got some money. What do you have that's going to suit my personality and my risk tolerance and so on?" So we have now got 6 properties for her. They all cash flow. They've got property management, and and she's going to continue to build out that portfolio until she gets to about 10 doors, and then we may help her do a small 1031 exchange. But that's one way, Alpesh, that I help some of my members and my clients get into the game. uh, she didn't have to travel to Huntsville. She didn't have to talk to the contractors. She didn't have to do any of that. But with a relatively small amount, she was able to get into sort of a B neighborhood in Huntsville. And we're doing the same in Montgomery and Birmingham and Mobile right now. So I would say take action, but and go hang out with Alpesh or myself, or both of us, and let's talk real estate.
I'm always open to talk about real estate or health or fitness or anything.
Yeah, yeah,
So,
there you go.
but some of the great points, right? Another thing I keep telling is the leverage component, right? You don't need 500,000 to start building your real estate portfolio. As you said, if you have 20 grand, 30 grand, 40 grand, you can just start buying real estate every time you have 20, 30 grand and take advantage of the leverage and low interest rate, banks are offering,
Absolutely.
and start buying. So those were some of the great points. Thank you, Bobby. I want to ask you about, which is your favorite self-help, business, or real estate related book, and why?
Yeah, I know. So if you don't mind, Alpesh, I'll give two names because I like each.
More the better.
All right, all right. So of course, Robert Kiyosaki's Rich Dad Poor Dad.
That's, yeah.
Yeah, that's everybody's favorite, right?
Everyone knows about it. That's how I started. And I actually, a couple podcasts ago, I reviewed the book
Mm,
as well because I wanted to just go through the book again. So I did the review of the book. But thank you.
yeah, no, that's a good one. And if you haven't read it, please go get a used version, used copy from Amazon, and or download the ebook.
Yeah, Kindle, Audible. There are so many ways.
Yeah. The other one, that really kind of changed my outlook on my friends and the people I work with is Dale Carnegie's
How
How to
to
Win
win.
Friends. Yeah.
How to win. Yeah, and influence. Yeah, that's a great book too. Yeah, two of the best book. Yeah, actually, they are top three of my favorite ones. Yep.
Which one's your favorite, Alpesh?
So yes, Rich Dad Poor Dad, of course, the one you just mentioned, How to Win Friends, and the third one, I like that Negotiation.
Yep.
That book is amazing too.
Amazing.
How not to split the difference.
Yep. Yeah, with Chris Voss. Yeah.
Yep. So yeah, I love reading as well, and that's another thing. This is real estate or any business. Once you start getting into it and networking with people, you will realize that you'll of course hear golden nuggets, but they will also tell you which books to read, which books change their mindset, etc., and that those are really helpful.
Absolutely. And surround yourself with positive, progressive people that are trying to get somewhere in life. One of the things that I do is, like, Alpesh and I, we would hang out, or some of the other folks that are in, whether they're in high tech or real estate, or as long as they're thinking, they have high motivational levels, try to surround yourself with those people, and you'll actually learn a lot from them.
That's the key.
Yeah.
So that was awesome. Is there anything else we did not discuss, Bobby?
No, I think we covered everything that we planned to. If you'd like to reach out to me, it's really simple. I'm on Facebook, Bobby Sharma. If you Google me or search me on Facebook, I'm there. My website is betterturnkey.com. So 3 words, betterturnkey.com. So Bobby at betterturnkey.com. But Alpesh, I'm also starting a podcast, and I'd love to have you on there. So look for that invite one of these days. But yeah, I think we are good.
Thank you so much, and I'll be honored to be on your podcast. I appreciate that.
Awesome. Thank you, Alpesh.
Thanks. Have a great day, everyone.